Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Scott Nations, president of Nations Indexes, to discuss trends in VOLQ and why we could potentially expect volatility to come down over the next 6 weeks for seasonal reasons. Scott, it's great to see you as always. Implied vol on VOLQ is at 29, but we've seen a fair amount of volatility with the exception of today.
Right. And actually, today we've seen a little bit. We started out higher today and markets are down a little bit now. So yeah, VOLQ now between 29 and 30. And Jill, there's a reason for that. That's about where it should be, given the amount of volatility we've seen over the past few weeks. The fact that there are many uncertainties when it comes to our economy. The Fed probably be at the top of that list, but also we're getting into the heart of earnings season. And so, yeah, if you look back, VOLQ between 29 and 30 is certainly very high, but there's a reason it deserves to be up here.
Yeah, well, and to your point about volatility, I've been on the camera since about 11, did not realize that we have sold off and we had a super strong open. So to your point, but you think that it could fall quite a bit over the next 6 weeks for purely seasonal reasons?
That's right. We're getting into the heart of earnings season. And while we've had a bunch of financial names, we've not yet had the technology names that are so common in the Nasdaq 100. We have Microsoft on the 26th of July. We have Amazon and Apple on the 28th of July. And I don't think VOLQ is going to come down until we get that data. But after that, traders love to take off in August. It's a time to get away. That market in August is usually really quiet. And so between now and the end of August, I would expect implied volatility and realized volatility to come down quite a bit. We just don't see a lot of activity in August. And so once we get past those 3 big earnings announcements, I would expect then volatility to come in quite a bit. And that's a seasonal factor. Again, we see that the last 2 weeks of the year, and we tend to see it in August. And so traders and investors should look at that in the context of the calendar.
But also high vols allows for some really interesting option strategies as well.
That's absolutely right. If you own a stock and you want to sell covered calls against it, then higher implied volatility means you get more for those options you're selling. And if you don't yet own a stock, but you'd like to potentially buy it at a discount, then selling cash secured, fully funded cash secured puts is a way to potentially do that. No matter what happens in that situation, you get to keep that option premium. If the stock falls below the strike price at expiration, then you're going to buy it at a discount to where it was right now. And both of those strategies are much better off when implied volatility is high like it is right now. And also, Jill, you mentioned VOLQ. We now have options trading on the VOLQ index. Ticker symbol is, no surprise, VOLQ. And those have started trading. And those are a way for people to either hedge or speculate. Hedging opportunities exist for a portfolio that looks a lot like the Nasdaq 100 using VOLQ options.
All right, Scott, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.